If you're planning on selling your home a few years before you join Medicare or once you're on Medicare, there's an important rule to be aware of so that you can avoid paying a lot more for your Medicare coverage. So in this video, I want to walk through what should you be aware of in order to avoid these mistakes. I'm Emily with the Medicare Coach, an independent Medicare consultant, helping our clients easily navigate both Medicare rules and insurance company options to help you do what's right and best for you. We're not an agent, a broker, have any relationship with insurance companies or the government, so you'll hear me say very different things in this video. Also, down below, I'll share some extra tips with you to help you more easily make your right Medicare decision. So, if you plan on moving or really selling a home a couple years, really 2 years before you join Medicare, or once you're on Medicare, there's an important thing to be aware of. I was hosting a client event the other day, and a woman was talking to me because she had a huge Medicare bill, and she had no idea what was happening. And come to find out, this was driven based on her selling her home. So there's kind of two parts to this. Number one, Medicare looks at your income to determine what you pay for Medicare. So as of 2025, if you file taxes as an individual and your income is over $106,000 a year, looking back 2 years, or $212,000 filing as a couple, you will pay more for Medicare. So again, in 2025, Medicare has these thresholds, but they're looking at your income from 2 years ago. So if someone sold a home in 2023, which impacted their income, they're going to pay more for Medicare right now in 2025. Now, this woman's been on Medicare for a while, but she sold her house 2 years ago. And so just now in 2025, she's showing this higher income penalty. It's called IRMA, Income Related Monthly Adjustment Amount. So number one, Medicare looks at your income from 2 years ago to determine what you pay for Medicare now. Now, yes, there is a way to appeal those income penalties, but you must have a qualifying event. And simply selling your home is unfortunately not a qualifying event. So I'm not a CPA, I'm not a tax accountant, I'm not a tax expert at all, but what I will say is this, is that anything that's gonna hit your modified adjusted gross income on your tax return will ultimately impact what you pay for Medicare. Now, some people will be selling houses once they are on Medicare, but buying a new house, and therefore, depending on their capital gains or their gain on the house, there may not be a tax implication at all. But on the other hand, if you do have a tax implication, you will pay more for Medicare when it comes to that. So again, my point is, if you're looking to sell a house, it can be worthwhile to sell your house in a year that you have another qualifying event. So I had a client who happened to retire 1 year, and at the same calendar year, he also sold his house where he was going to have a larger gain that would impact his income. And in that case, we could appeal the whole thing. But again, depending on how the timing works out, you could have higher income or higher Medicare costs as a result. Our client I was talking about earlier, she's upset with her CPA as well as her financial advisor for not bringing this to her attention. So my point again is this, please be aware of how income impacts your Medicare amount, your Medicare premiums, because it will impact both your Medicare Part B as in boy, as well as your Medicare Part D drug premium. So please be thoughtful, please be prepared. You should still sell your house, but I don't want you to be surprised when it comes to Medicare costs with that, all right? So if you found this video helpful, give us a thumbs up. Again, selling houses is exciting, but it can also be unique to kind of manage all the different rules that are out there when it comes to the government. So again, make sure you like us, and we look forward to helping you easily make your right Medicare decision.